Boys, it is fucking June 15th, and we took a dub today. I did tell the Discord absolutely no trading. I didn't alert this one. I didn't do any of that because I wanted the boys to stay out of this market. As you can see, Jerome Powell started talking, and the market done what? Just chopped. We really took all buy side liquidity, came down, swept sell side, tried to make a move, swept more liquidity, tried to make a move. On the 1 hour, when you look at this is just a range. We're not trending, we're not moving. We didn't make higher highs, we didn't really make lower lows from this area. So it's honestly fine that I didn't allow, well, it's not that I didn't allow the Discord to trade, but I didn't give them any ideas into trading, which is what I was aiming for. So, with that being said, ladies and gentlemen, let's start off the day. So, on the 4 hour, when we came into market open, which would have been on this candlestick here, we were on a bullish bias. The reason being is we break structure to the upside right here, a high and then a low. That's a break of structure. This is a swing high. We break it, boom. We also leave it in balance, which we end up hitting throughout that current day and pushing higher. So when we come into this market, we don't have a break of structure to the downside. Our bias is bullish. If we check ES, we didn't get this break of structure here the previous day, but this break of structure that I just pointed out on NQ tells us ES's idea. Now, here's the interesting thing. ES had undone this entire move down while NQ had actually respected the imbalance and again. With that being said, ES came up. It attempted to make a higher high, did not. ES is what's really been range bound. So we didn't take a trade on ES considering that it had done this whole move, filled in this whole equilibrium from this move down, invalidated it, while NQ, on the other hand, still had some room to run. So I was focused more on NQ using ES as confluence. So we are confirmed a bullish bias. With that being said, if we break down, where is 9 a.m.? Boom, this is our market open. What do we have? We have initially London lows, and we have Asia lows, and we just have a wee bit more previous day liquidity. So with that being said, when we come down into this area, we're going to go into the 30-minute actually because we have legitimate pre-market liquidity right here, which market opens, as you can see, the 9:30 a.m. candle. We're on a bullish bias. What are we looking for? A higher time frame confluence, a liquidity sweep, imbalance, order block, breaker block, equilibrium, BPR, all of it. With that being said, what's right here? An imbalance, an imbalance. This right here, alongside sweeping pre-market liquidity, was enough buy orders for us to pick up and send the market up. So obviously, if we're on a bullish bias, we're going to stick true to our bias. We're going to bet on ourselves and we're going to be confident in ourselves. With that being said, here is the pre-market liquidity that we sweep. Once we sweep it, we see this move down that causes a break of structure to the downside. Now, I was talking to the students slash members in the Discord, and they were like, but we have a 5 minute break of structure to the downside. I was like, but you got to realize you need to trust your bias. We as well have a 5 minute break of structure to the downside here. We as well have a 5 minute break of structure to the downside here. But we're not worried about that because we're understanding that in order for us to sweep out our higher time frame points of interest, our higher time frame confluences such as this imbalance, we're gonna need to make a break of structure to the downside, break of structure to the downside here, and break of structure to the downside here on the 1 hour. But like I said, we're still understanding we need to A, sweep this liquidity, and B, enter into this imbalance. Now, the way to not get distracted by this noise is to remember that the 4 hour holds absolute all loyalty. The 4 hour is nowhere near breaking structure to the downside, so why would we be bearish? Why would we worry about that until the 4 hours started to show major selling pressure, started to break structure, change market sentiment, then we flip our bias. So we're going to continue on to the 5 minute. Yes, we get a break of structure to the upside right here. So this is kind of like the first ticker to my play. I'm like, all right, we have a pre-market break of structure, which is not amazing, but it's okay. It's pretty decent. I'll take it. Then we immediately turn around and break structure to the downside. Now, my members in my Discord were like, well, there's 5 minute break structure. And I was like, it's okay because we need to learn to not really take into account these bearish confluences. Use them to your advantage as confirmation, not as the deterioration. You don't want it to affect your confidence. So the way we would use these bearish imbalances is, for example, or bearish confluences, this bearish imbalance right here, we are going to use as a take profit level. Because we know if we can close above this and continue through it, then we are confirmed buying power, right? The same thing with this here. We have an imbalance here, a bearish imbalance. What did price do? Closed above it perfectly. Closed right through it, almost to the T. You can see here on the left side. We're really close. and then we continue buying pressure, so that you can use it as TP levels, use it as confirmation, even though it's the opposite side bias. You just don't want to focus too much on it and let it take away your confidence from your daily outlook. So with that being said, we have the pre-market break of structure to the upside. When we get this, we as well are still waiting for a higher time frame liquidity sweep, tap into imbalances, which we get on this move that breaks structure to the downside. Remember what I was saying earlier, in order to get to a lot of these confluences, we do have to break structure on the lower time frames, which is totally okay. We do that, boom. Next candlestick, we close right here, boom, we get the proper sweep. And then we as well tap into the imbalances with this. So I'm thinking we're going into our higher time frame confluences. We got a pre-market breakage structure to the upside. What I'm interested in actually today was the 1 minute. And like I said, yes, I did trade this. I'll even show you. Oh my God, where the fuck? Right here. Okay. So this is where our 5-minute break of structure was. And then you can see here, this is the move down that sweeps the liquidity and taps into our higher time frame confluences. When we do that, what do? We get a bearish imbalance, a bullish imbalance, a bearish imbalance, and a bullish imbalance. After seeing all of this happen, I haven't taken the trade yet. I'm just watching it, trying to get a feel for where the market wants to go. We had to move up, swept liquidity, move down, swept liquidity. Kind of a 50-50 ball. We had Fed Powell speaking earlier. It wasn't great. But within creating all of these inverses, all we're doing is accumulating orders. So the market wants to move heavy to one side or the other. We get this next move down into these imbalances, and I'm like, all right, if we disrespect this, there's absolutely no play. This is the only opportunity I will take today. And if not, whatever. With that being said, this candlestick respects this imbalance above the 50% mark, and we take an entry. Right here. Right spanking right freaking here. With that being said, even look, I'll show you executions. Execution. Bro, what? Am I not? I am on trade with it. What's going on here? Are my execution labels? Oh? Why are they not showing up? What the hell? Why is there none? Hold up. Bro, I can't show y'all here. I need to change the screen because y'all are gonna see my login information and I can't have that. Y'all can see this though. Actually, let's make it this, and then y'all can see this. Shit. Hold up. Stay with me. Stay with me. Don't click out the video yet. Chill out. Don't click out the video. Okay. Y'all can look at this real quick. This is cool. Okay, so while you're looking at that, I need to fix or check what I'm logged into. Yeah, so where are my trades? Why are my trades not being shown? Execution labels are on. To the right, instant order placement, executions. What the hell? Okay, I'm gonna log out of Tradeovate here, and then I'm gonna log back in, and that should possibly solve the issue here. Regardless, you know what? I'm not even gonna bother with it. I accidentally was logged out, so we're done with that for now. Let me get this back here on the page. Why is now fucking TradingView will not show on? There we go. Here we go, boys. All right, we're back. So yeah, I'm just not even gonna worry about showing you the executions. You can check my Instagram right here at. You can check it actually if I type all the confluence are gonna pop up. So not yet. At NASQACK. NASDAQ. That is the Instagram. I have my entries posted on the story. Go peep it. And here we are. So we have this respect. I took this entry and my TPs were right here. These highs. The reason being is because I'm not going for the gamble lotto with Fed Powell speaking and putting my TPs at these highs, even though we did take them out. It's just not my play. It really isn't, because I'm going to take the piece of my pie that I know is going to get put on my plate. I'm not going to gamble up for 7 pieces of pie when I may only even get 3. You get what I'm saying? There's no confirmation that we were going up there. Considering I wasn't even expecting this move up with Fed Powell speaking today, I was literally expecting chop. So this was my trade. You guys are going to see it pop up. Quite literally right here to here was the entire trade. And so now, here's where the important part comes. So that's the trade recap of myself, of the trade that I took. Here is where the important part is. So within this trade here, if we were following the trading plan by the playbook, what are we looking for? 5-minute break of structure plus third confluence. So what do we get right here? What the fuck? Connect. Here we go. We get a break of structure. This is, oh, sorry. This is our break of structure. Boom. Higher, or we make a high, and then we make a higher high. So we break structure with this candlestick up, leaving an imbalance. This is literally the most playbook thing. The only thing we're missing is this right here. This wick did not touch into this imbalance. That's all we were missing for our honestly, our entry confirmation. We needed to see respect of our third confluence, which is this imbalance. Price came down into this imbalance and respected it. Boom, you take entries. Now look at this trade. This is given extra higher time frame confluences, which means it's a pretty solid trade. Even if we were to TP just to these highs, which is where we would have TP'd, look at what this possible risk to reward ratio could have been. Below this candlestick, boom, that's a 3 to 2.7, boys. We do not miss in the cast. We don't fucking miss, okay? This shit, when you get given the proper setup, there's no missing it. It literally is right in front of you by the textbook, by the rules, brainless, done, easy, and simple. So that would have been the proper playbook setup. I took this setup, whatever, yippee yaddy. I wasn't even supposed to trade today. Low-key was undisciplined due to the fact that I did trade because I was telling all y'all in the Discord, absolutely no trading today with Fed Powell speaking. But I was given an opportunity, and when I get an opportunity, I'm just going to take that opportunity, especially if I'm confident in it, which I was. And therefore, that is the June 15th market recap / trade recap. I absolutely love y'all, and I'll catch you on the flip side. Join the Discords, you little mutts. I'm just telling you right now, y'all are missing out on so much. So come be homies. Honestly, just come home. Welcome home, fellas. So I'll see you in there. Take care.